In last night's video, I said three things would happen. One, we would see a Bitcoin drop to 100K. That happened. We also said the fact that Bitcoin would bounce, and following Bitcoin, altcoins would also bounce off of that level of support on the weekly candle at the 50-day exponential moving average. That also happened. And more importantly, we talked about the fact that privacy coins are going to rebound the fastest, the hardest, and are going to be actually the best opportunities when it comes to selling off. And if you're looking to hold an altcoin, privacy coins would be the go-to place, not your Solana, not your Ethereum. And that also happened. In fact, the privacy coins that we talked about are mostly in the green, even though Bitcoin was down to 100K. We're going to talk about what does this look like moving forward, kind of piggyback on yesterday's video and see how today is shaping future crypto prices and some of the things that could happen over the next few days that could give us a bit of direction. If you're new here, my name is Alex, with about crypto news, crypto passive income. If you enjoy content like that, consider subscribing. If you enjoyed this video, smash up the like. Without further ado, let's end the video. Earlier today, I posted this image from the video actually last night talking about the 100K level. The $100,000 price for Bitcoin is both a support level on a technical analysis standpoint. It's also a psychological level of support. And currently it is support. Now, the moment that $100,000 Bitcoin becomes resistance, then at that point, we are going to be in a bear market. There's really no ifs, ands, or buts about it. It is simply just the way things are going to be. And because at the point people can trust 100K to be a good entry, to be an opportunity that I can take this without thinking it's going to go further down, it is a mass psychological perspective when you combine that with technical analysis. Now, at the point where people are freaking out about the fact that Bitcoin's not going past 100K and it's been over 100,000 for a long time, that's going to cause a lot of psychological fear for a lot of people and going to cause a downtrend. So I want to just very briefly play this clip from last night for those who may have not tuned into that video, talking about, now mind you, Bitcoin at this time was about 106.5, and we talked about the fact that Bitcoin was going to go down to 100,000. So play this very briefly. We've seen a double top here. We're seeing a retracement back to the 50-day exponential moving average. Now, that 50-day exponential moving average happens to be, if we get rid of this, right around the $100,000 mark. I think very realistically, if we touch 100,000, which I think we could very realistically go to 100,000, there's going to be a lot of FUD, a lot of fear if we do that. But at the same time, there's a lot of FUD and a lot of fear when we went from 110K all the way down to 75,000. And a lot of people said, well, boom, we topped, now it's over. And I think a lot of people are also going to say the very same thing as we see this. Now, mind you, this is going to take some time to actually play out. This could be kind of mid-November into late November before, which would set us up for a great Santa rally. If you are bullish, right? If you are bullish, this could set us up for a very good Santa rally to new all-time highs by the end of the year, if the 50-day exponential moving average stays in play. The reason I say that is because it stayed in play here. It stayed in play here. We're not, even though we corrected here, this was on the 20-day, we jumped. So I'm going to kind of pause it there. But essentially, the whole idea is still very relative. And mind you, this is still on a weekly candle. So we just on a weekly scale touched this 50-day exponential moving average. When you saw this touching in prior instances, it was for a very long period of time that it played around with this 50-day EMA. So while we corrected to that in the very short term, from a short-term perspective, there's probably going to be another 1 to 2 weeks. If this is continued to be a level of support, there's probably going to be another 1 to 2 weeks where we use this as support, just like we did back here, just like we did back here, before we break back above to new all-time highs. That is the bull theory. Now, the one thing that we didn't see back here and back here is we didn't see consistent closes and candles closing below the 50-day exponential moving average, right? So if this candle, right, for example, here, red candle, if the next weekly candle was down below this 50-day EMA and closed below it, then we would have probably seen a lower trend line. The problem is, or not really the problem, the historical aspect of it is we closed above it. So this is very, very important as we look at this. Short term, like I said last night, short term, there's going to be a lot of pain. There's going to be a lot of fear. There's going to be a lot of uncertainty, but you have to take advantage of it to its full extent. And the other thing that I talked about towards the end of the video, even though some of you, disagreed with me in the likes of the comments, as I said, privacy cryptos are going to be the ones that do the best in this overall instance. They're simply going to be ones that hold up the best. They're going to be the ones that rebound the fastest. They're going to be the ones that rebound the hardest. I talked about Dash. I talked about Zcash. I talked about some of the others. And guess what? Where are we today? Zcash actually up $20. Horizon up. Dash up. Every single one of these is up, just as I said in yesterday's video. So even if you weren't holding BTC and simply had just, at that time of the video, simply just pivoted in some of those privacy coins, not only would you have not lost any money, you would have actually made money. And that is a huge, huge difference when you're like myself, and I'm not a genius. I've simply just been in times like this. I've seen how market cycles work. I've been in crypto since 2017. It's very simple to understand when metas are strong enough where people are not going to sell into the fear when there is a popular meta that still has a ton of traction. Now, if that meta, the privacy meta was gone, then you're going to have Dash, you're going to have Horizon, you're going to have Zcash dump, just like Ethereum dumped from 3,600 to 3,000, right? So there are different approaches to how you trade opportunities like this. So congratulations for anyone that traded this. The one I do want to add to this list that I think has a lot of opportunity is Decred. And Decred is also privacy, but it's simply just taken its time to kind of pop off. Now, mind you, it was very much stagnant around the $17 range, $18 range, and then all of a sudden, literally just yesterday, it goes from $18 to a high of like $60. It was, or $65. It's absolutely insane. Decred is a privacy crypto. For those maybe not familiar, highly recommend that you go do some research on it, check it out. But it is also proof of work. This is the thing that is consistent with a lot of these privacy cryptos, is their proof of work or previously proof of work. For example, Horizon, which is now on Base, was prior proof of work, transitioned to proof of stake. Either way, we still love it. But in the end, this is still a current meta. Now, the moment the privacy meta is gone and the privacy meta is invalidated, these are going to correct pretty hard. This is really how it's going to be, because they are substantially higher than the rest of the alts out there. So just be mindful how you're trading on these, making sure you always have your stop losses, your take profit levels, because these are going to be wild swings. But I mean, look at this, right? $830 million in trading volume on a $350 million market cap. You're going to see a lot of these do very, very well. Dash, same situation, higher trading volume than its market cap. This shows you that there's still a lot of attention and a lot of interest in the privacy meta in general. Decred also gaining a lot of that traction as well. So either way, let's move on to kind of what is possibly going to be happening and what is the direction, short-term, long-term for Bitcoin. So I think there's going to be still a lot of short-term uncertainty. This was a news article from actually earlier today talking about the Department of Transportation might be forced to shut down some airspaces next week. This would be absolutely terrible for all kinds of travel. Because of the shortage of air traffic controllers, most of them having to work without getting paid. I myself am furloughed. I'm not an air traffic controller, but going to work, not getting paid, being furloughed just in general is a pain. It really is. But this is going to be even more so for travelers, because this isn't just the air traffic controllers. This is talking about the fact that you're going to see a lot of this impacting normal day-to-day travel right around holiday seasons. I mean, you look at Thanksgiving right around the corner, you look at Christmas coming up as well. People are making a lot of travel plans. This is the worst time to have a government shutdown and to shut down airspace potentially next week. So I think also you have a lot of elections happening today. There's a lot of speculation that Democrats wanted to keep the facade or keep the positions that they had going as far as a government shutdown until after the elections, to not, cause any commotion or cause any disruption based on their stances. So could there be a lot more interest once these elections are over, maybe into next week, actually something happening potentially? But I think if this continues, the domino effect impacts are going to be felt and is only going to have a longer cascading effect. So I think there is a potential as we kind of look at this and we say, well, where is Bitcoin right now on a weekly? Where is Bitcoin right now on the daily? And where is Bitcoin more or less on the hourly? On the weekly, we need to really long-term, mind you, this is weeks, long-term, we need to stay above this 50-day EMA. Now, we went below it. We've gone below it before. Not the worst thing in the world. In fact, here we went, let me just see if I can do this here. This was about 5% down below the EMA. In this instance, we are down about 2%. So we could technically, Bitcoin could drop really about 3 to 5% more and then jump back up. That would probably be about a $95,000 Bitcoin. I think in a very worst case scenario, we would maybe see a wick down about here. I don't think it will happen. I think a lot of it also depends on the elections that we have today, government shutdown, a lot of the uncertainty as far as travel. There's going to be things that play a role into this. But I think if you are bullish, you need for this to not drop anymore. It's simply what you need. And on a daily basis, there's really not much to say for the daily. Obviously, this is what we had charted out as far as this drop that we had back here. This is back in June. We saw this balanced level of support retrace. So this is good, at least on the daily. The biggest question is when the next daily candle opens. If it's down below this level of support, there's not a whole lot more support other than maybe you could call this cluster right here before this massive breakout, another layer of support, but there's really not a whole lot left until you go down to like 90, 80,000. You also have to think about the psychological levels, the solid numbers, the 90s, the 95,000, etc. are always going to be levels of support just psychologically and mentally, just the way that 100K is. I think just 100,000 is a huge level of support. And until that gets broken and completely invalidated, we are still in a bull market. Now, when it comes to how you take your trades, I would highly disincentivize using any kind of leverage because these are some crazy wicks. I mean, we saw this just on an hourly scale, just one hourly candle going from 106,000 all the way to 104. That's a 2,500 point move in 1 hour. This is a very quick move. Even from this is in 3 hours from 105,000 to 100,000. $5,000 in 3 hours. That's a very quick move. So do be mindful. Leverage is extremely risky at times like these. And this is where you have to kind of take things day by day. It's going to be interesting to see, how Bitcoin holds up on the hourly. I think it would be very bullish if you're looking at this on a very short-term scale. Bitcoin ideally would need to close above about this gap, right? If Bitcoin can make it back to 105,000, where we saw kind of this cluster right here, this would be very bullish. And if we saw a little bit here and then we slowly make our way back up here, I think it would be very bullish for the likes of Bitcoin. And that kind of plays a role into when you look at the liquidation chart, right? The majority of liquidations are going to be happening about 104 to 105,000. So there's really not much that's going to happen around here. Most of that is going to be up here. You're seeing, 29 million, 20 million, 20 million, 22 million. 105,000 would be a huge level of liquidations for people who are short. So if you're looking at this and you're looking at how do you make this kind of gap up, is you essentially scare the shorts into thinking that you're going back up here to, the $106,000, $107,000 range, because this is just one candle on an hourly chart. This candle could close just as fast as it went down to being filled up. So be mindful on a short-term scale. On a short-term scale, short squeezes can happen very quickly on the upside and the downside. So be mindful. I think right now this is starting to look very bullish. Just the problem is there's not a whole lot of support on any moving averages on the hourly. So this is just something that's going to be interesting how the next 12 hours works, especially going to be evening and midnight in the United States. You're not going to have a lot of active traders in the US. It's going to be interesting how the rest of the market responds to this. Could we see a gap up right here to this 104K, 105K? If so, it's going to be very bullish. And I think that would just only validate that the bull market is still in play and keep the weekly candle in play. So either way, this is something you have to take day by day. If you're looking for entry, putting in limit orders at 100,000 psychologically, you can't really go too wrong with that. But don't use 50x leverage. And at the same time, if maybe you think the bear market is over, if you're very, very bearish, then you essentially don't want this level of support back here now going to be level resistance be broken. So it just really depends on how you look at it. In the end, there's ways to not be a statistic and not be one of the people that was, longs that were wrecked. Over $2 billion in total being wrecked, 1.6 of that being longs. You don't have to be in this statistic. There's ways to trade without having to be liquidated with crazy leverage. So be mindful, keep your head on your shoulders, and it's just something that you just have to kind of take day by day. And a long-term scale, like I've been talking about for several weeks at this point, is it's not wrong to consider going stable until some form of direction is validated. Because if you go long and we are truly entering a bear market because we have another weekly candle that's below the 50 EMA, historically, that's not a good thing. So you really want to be stabling at 90,000 when you could have stabled at 100,000. If you think you're very bullish, then take the opportunities when that level of support of 100K is tested and take those opportunities to trade. But love to hear your thoughts. How do you think the next couple of days are going to play out? Do you think we have tested this as essentially a bear trap and we're going to go to new all-time highs? Or do you think this is getting close to that level of validation that bear market is coming in the next few weeks? Let me know your thoughts down below. If you enjoyed this video, smash the like. If you enjoy content like this, consider subscribing. Until next time, guys, stay invested.